Welcome back, everyone. Hope you are well. If this is your first time here, I am Blair Armstrong of Team Armstrong Coldwell Banker. As you can kind of see right behind me, I am a global luxury specialist in the world of residential real estate. I'm also a global luxury ambassador for Coldwell Banker. And again, we're located in the beautiful Coachella Valley, which is, if you don't know where the Coachella Valley is, it's basically Palm Springs, Palm Desert, La Quinta, Rancho Mirage, Indian Wells, those areas. So if you've come out to the desert and visit us, that's the Coachella Valley. Also home of the great music festival, Coachella Valley Music Festival, and then also Stagecoach, and home of the very, very famous Coachella Valley Firebirds, AHL runners-up in the Calder Cup. So enough of that. In just a short amount of time, we're going to join a good friend of mine, Sean LaRue. He's also a colleague, also basically I would call it a collaborator. But Sean LaRue of Sean LaRue Home Loans is a mortgage officer. He's helping you put together the right package to help you find that home that best fits you. So many different avenues to get a loan. Last couple of weeks, we've talked about FHA, VA, bridge loans. This week, we're talking about income statement loans. So strap in. Let's go ahead and join my good friend, and I said colleague, collaborator, if you may, Sean LaRue of Sean LaRue Home Loans, and let's talk about income statement loans. All right. Good morning, good afternoon, good evening, wherever you may be. Welcome back. You have reached the mortgage moment, the mortgage minute. I am Blair Armstrong with Team Armstrong Coldwell Banker, located in beautiful Coachella Valley. And then on my right, maybe your left, we have a good friend and a basically business collaborator, if you may, Sean LaRue of Sean LaRue Home Loans. He's located in Arizona. And we've been doing a couple podcasts over the last couple of weeks. We've talked about FHA loans. We've talked about VA loans. Last week, we talked about bridge loans. This week, we're going to talk about something a lot of people are kind of getting back into, but income statement loans. So, Sean, what are you seeing actually, before we get into the weeds of this? A lot of fluidity in the market right now. Interest rates are going down like this. There's kind of chatter around that interest rates may go down a quarter a point, maybe half a point sometime in the near future, maybe not, but like this year. Are you hearing that? What are your thoughts?
Yeah, buddy. Great to be here. Good to see your face. Interest rates, are floating between 6.8 and the low sevens, down from 7.5. This last week, they've kind of been all over the place, but we're seeing interest rates come back down after a little blip up. And as far as the prime interest rate and the Fed funds rate, I think as soon as the unemployment indicators kind of hit that we're at a 4.1 unemployment, if that ticks up another 0.1%, last I checked, it was at 4.0.
Okay.
It's going to kind of trigger some of the Fed leaders to lower interest rates. So we're hoping for a quarter rate reduction in the prime rate. Prime right now is at 8.5. I just checked it again this morning. No movement yet. But yeah, hoping for at least a quarter, hopefully a 0.5%, will kind of bring that consumer confidence back. And that's going to, I really think, jumpstart the industry again.
That's what I'm feeling too. I know that I'm glad that you and I are on the same page in that. I've been telling them, like, okay, even if you're cash buyers right now, once these, and you can correct me if I'm wrong in this, but once those interest rates start coming down a little bit, it's going to put a lot of pressure on these houses that are out there. Not saying that cash is not king, but sometimes if it's structured right, finance can go ahead and win an offer, depending on what you're doing. But it's going to put a lot of pressure on a very low inventory market, which, lower interest rates, more pressure, higher the price in houses. So, as Sean will say now, and I'm going to say right now, If there's an opportunity for you to get in or at least start the process now, I would really start entertaining that idea before this quarter point, if it does. Right now, it's speculation, so we're not don't go to the bank on that. But if it does happen, housing prices are going to start creeping back up into that 2 and 3% increase every year, and there's some opportunity right now. There's some houses out there that need a new owner, and sellers are very open to offers. So
Yep.
if you're listening to this, get a hold of Sean, start breaking down, and at least start your pre-approval process. If you want to go a step further, pre-qualification process is really good too. It makes you just a lot stronger when you come to the table with an offer. And if you need help with a real estate inside the Coachella Valley, let me know, or anywhere else in the world. But anyway, so getting back into it, um, we have this. We talked about this. I feel like a couple of years ago, and maybe longer than a couple of years. But um, people are very used to kind of showing tax returns. Okay, this is what I need to do is show and that's how I'm gonna get my loan. You and I were talking a little bit ago, uh, basically saying, hey, sometimes we could do a loan based on income statements. So what do you mean by that?
Yeah, absolutely. The best loan products are going to have the lowest interest rates as long as you can provide a year or 2 years worth of tax
Mhm.
returns. And
Right.
so if you're self-employed, what we're looking at in order to qualify for those programs is usually a math equation of your net income
Okay.
after your expenses, what you're claiming on your tax returns for your net taxable income. And there's some other things like depreciation and adding back some other things, mileage. Um, but it's a common misconception that if you don't qualify using your tax returns, or if you don't report a lot of income on
Hmm.
those tax returns, if you don't pay a lot of taxes on your income, that you're just not going to qualify for a loan. And that's just
Okay.
not true. Um, I hear a lot from our self-employed entrepreneurs that they've got a great accountant, a great CPA,
Hmm.
and kudos, attaboy. We're all limiting our taxable income as much as possible. Um, but there are other programs that we can use in order to qualify for a loan, and they still have great interest rates. And it all depends on um, what programs you can get and to get a loan so you're not having to eat up all of your cash.
Okay.
And so we
Okay.
do that through a number of different programs, but today we're talking about bank statements.
Okay.
And so by using either a 12 or a 24-month average of your deposits, either personal or business bank statements, we collect the bank statements, do an average of that income,
Mhm.
and there's another little math equation depending on the industry that you're in, like cost of goods,
Okay.
labor, if you have employees, and different things in order to um, qualify you for a loan amount, not using those tax returns. So,
Okay. Are you starting to see a lot more of that lately? Because obviously, entrepreneurship has become very popular over the last couple of years. Are you still seeing more tax returns, or are you seeing more bank statement loans?
I think in this market, we're all kind of getting creative with the different
Hmm.
types of clients that we have. And I mean, I see a lot of W-2 employees. I see a lot of entrepreneurs. I see a lot of investors. It's kind of a mix of everybody.
Okay.
Um, I think with the clients that are in the market right now, we were talking last week about bridge financing. Um, there's a lot of different ways to skin a cat, and it just depends on where you're at in order to meet your needs. And so um, I do see a lot of self-employed scenarios.
Okay.
And so this is a bit of a reoccurring theme, which is why we're talking about it, because we really want to get the word out that, if you are running a business, it's not your only option. If you're a CPA or financial planner and you're looking for other opportunities for your clients, not just with their tax returns, because it's a balance of, limiting your liability, but also kind of listening to their needs and their dreams and goals for either buying a second home or buying a property to live in,
Okay.
if they don't own one.
So yeah, as I said earlier too, it's such a great opportunity right now because the housing market has taken it's a little bit slower. It's still lively, if you may, but it's a little bit slower than normal for summertime. And I'm just using our market for example. You may be in a different market right now, depending on where you're watching this, and houses may be moving. But for us desert people right now, typically this is actually a really busy time for us because a lot of people are coming down here, as I say, secondary homes, buying them, getting them ready. So when November or December come around, once that house is renovated, they can move into it and stay at throughout the year. But it's been little bit slower. Still a lot of chatter, but going on there. But I really getting back to what Sean was talking about earlier, um, you know, over the last couple of weeks, I said we talked about the FHA, we talked about the VA, we talked about the bridge loan, and now here we are as income statement loans. I mean, I hope that you guys will go back and watch the past episodes and understand that it's not this thing that we just said, okay, we have to bring in this tax return, you have to do this thing and do this, and it's not every loan fits into one box, and there's plenty of opportunities to do different things. So really reach out, talk to Sean. This is what he said. Get some so Sean can get some background with you and try to figure out what's going to be the best fit for you, and not what's the best fit for John Smith down the road. So,
Right.
um, is it a little bit more cumbersome? Because obviously with tax returns, you kind of see that is a little bit more cumbersome with a um, income statement loan? Are there more hoops to jump through, or is it about the same as as traditional standard loan showing tax returns?
Look, what I like to do is I like to get all of the information. I like to see if we can qualify you off of your tax returns first.
Okay.
Um, but if we kind of know we're trending in that direction, I can look at the tax returns. If you're trying to, get the best programs, maybe we can posture ourselves to see what those tax returns would look like in the future. But um, with everything being online, going in and downloading your history, you can easily get 12 or 24 months of those bank statements very quickly. It's a little bit more work for us to type in all the deposits, and we're reviewing it, but that's what we do. And so I like to take a 50,000-foot view, get the tax returns, get the bank statements, because really what we're analyzing is credit, income, and assets.
Okay.
So, I can usually get a loan done with two out of the three of those barstool legs. Um, so if you've got, great verifiable income and a great credit score, we can get you a low down payment loan. If you've got great assets in the bank and a great FICO score, we can use this different kind of income program. But that's really what I do, and I'm a mortgage bank, so I don't offer just like Wells Fargo's or Bank of America's products. I work with 40 to 50 different banks in order to make sure whatever puzzle you've got going on in your life that we can find a good home for your loan when you're buying a house. So
Okay. Are there different rates for a conventional tax return loan compared to an income statement loan?
what's really great right now is that the interest rates for these I guess you call them creative underwriting products, is that the rates are actually closer together,
Okay.
more than they've been in a long time. So the rate's going to vary depending on property type, whether it's a home or a condo. Um, it's going to depend on if it's fee or lease land, and your occupancy, but the difference in the rate is very, very small. The most important thing is really having the opportunity to get your loan funded,
Okay.
and get you the liquidity that you need, so that you're not having to liquidate retirement accounts, IRAs, or 401ks creating a taxable event on top of all of this. And so that's really what I do is mortgage planning and making sure that we're meeting your needs in order to create the fewest taxable events, but also funding enough so that you're not having to deplete all of your cash. So you
Okay.
have more opportunities for fun or other investments.
And their stuff. So realistically, the way that I'm hearing, I mean, obviously the same down payment, we're looking for 20%, correct? With the income
Um,
statement,
you
or
can
could it be
actually
less
do
than?
10% down
Okay.
on
Okay.
primary residences. Um, yeah, and I'm doing one right now where they have a part-time job, W-2, plus their other business that they're running. So we can actually count both sources of income. If you have a spouse or partner that is contributing as well,
Mm-hmm.
they can be an employee. It's not all or nothing. So, it's really a blend of a bunch of different things.
It's a cornucopia
Yes.
of
The
and I don't know if
Thanksgiving
that's
dinner
a
of
thing. Yeah, put it all together, mix it in a bowl, and
right,
it'll come out the right side. So I think
right,
that's great. I just really appreciate these conversations we've had over a couple of weeks. Just different options. Um, I really think that someone that's going to go through the loan process, right, really doesn't know, or is too afraid to ask. Like, this is where I'm at. I want to buy a house. I don't know where to start. And I think what Sean was just saying this again. This is our fourth episode over the last couple of weeks. Um, is reach out and just start a conversation and kind of see where that leads you and where you're comfortable and where you're not comfortable, and then find that product that's going to work best for you. And as I said, instead of trying to
right.
sit in that box of like with everybody else and confused all theirs, but do some homework by asking questions and reaching out to Sean. He's a lot of the stuff that you could start doing along with the first conversation is the next part is to fill out an application, which you have online, correct?
Yeah, they can go to seanloans.com and easily download the app or fill out the loan application. It takes 10 to 15 minutes and it's super easy.
Okay.
Um, but yeah, we got to do the homework. The last thing I want you to worry about when you're shopping for a house is worrying about the loan or chasing
Mhm.
down pieces of paper. So, nobody wants to do the work until they find the house, but I really want to encourage everybody to do the homework first so that you have a much better shopping experience.
Mhm.
And at that point, we've got it all done. We can close in 15 days. And all we're really needing to do is the home inspection and appraisal and make sure we have our escrow paperwork all in place. And so at that point, you guys are really focused on making sure that the home inspection's coming in good, coordinating the paperwork with escrow, getting home insurance bound and shopping that,
Mhm.
and focusing on your move or your vacation home in Palm Springs.
Perfect. And that again, coming back to we've been talking about mortgage and what this loan is all about. What Sean just said there, if you want to rewind that for a little bit, is going through this process is really going to almost make you. I mean, if you get far in the process, not just pre-approval, but this pre-qualification where we really just need to go ahead and get an appraisal or home inspection, make everything was legit. You're almost like a cash buyer at that point,
Right.
depending on where you want to. So super strong. So when you're with a person like me, a realtor, we're going out, says like, one of the questions I asked, are you going to do cash or loan? Loan. Okay. Have you started the pre-approval process? No, I haven't done that. I'm probably going to, because I don't want us to go find a house. Guys get very excited about and then find out that it's just not the right fit for you financially at that time. So we have to go look at something. So really kind of this is the start. Have a conversation where you're comfortable. Here's what I'm making. Here are my assets. Da, 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 da. What is the best? What's the least I can afford and what's the most I can afford, and kind of find that. So when we're going out to it, we can really hone in into those homes at those price range in certain areas and find the right house for you, instead of like, oh, I found this house, and go back like, oh, by the way, you didn't qualify for that loan. or for that amount into it, or whatever. There's different scenarios in there.
The worst thing about the experience is having to worry about the money or
Yeah.
having surprises at the end. Like there's no reason why we have to have, surprises at the end or changing banks
Hmm.
unless something comes up with the property or the HOA that we're not aware of. Um, but the money should be a secondary thought.
Hmm.
It should be totally out of your mind because we're going to be organized. We're going to have all of our work done ahead of time. And we can do what's called a TBD approval, where we're actually getting it in writing from an underwriter. The underwriter's reviewing everything. And, if it takes a month or two in order to find the right house, then at that point, we know the loan program, we're watching the market, and maybe we're only doing like a bank statement refresh. So it should be really, really easy, but it really depends on you, the buyer,
Right.
of, are you going to do the homework and are you going to make it easier on yourself? And you really can't. And I really encourage you guys to take advantage of that because, um, whether it's now or in 6 months, if you don't do the work, you're not going to know, and you're going to be surprised by something that you weren't aware of. Something might pop up on your credit report. Your credit score might be different. You could have spent the last 6 months working a plan to get
Hmm.
yourself in a better spot just by knowing. And um, you know, my time up front is absolutely free. It doesn't cost you anything in order to get qualified and do this paperwork. I'm going to provide you so much value throughout the process and through our consultations of everything that I provide, um, that you're going to know and trust that you're in good hands and that the money's going to be there when we're ready to close. So that's
Absolutely.
really what I love about my job is the clients that trust us and are excited to work with us in order to make this experience just so much smoother than some of the nightmares you hear out there.
Yeah, I think that's a big deal too. You and I are in the same boat. None of us get paid until we close that transaction.
Yeah,
And we don't like going in and representing you. I, for one, will say this, and Sean will say this too, is when we go in to represent you, we want to win for you. And so when it doesn't work out for certain things, um, it's it hurts us as much as it would hurt you. And that's just honest to God feeling. There's a little bit of feeling like, freak, I failed or something like that.
yeah,
But so that's why it says if we can get all of our ducks in a row, we know exactly what we're looking for right now, especially since we're talking about this type of loan or any type of loan you're going through, which is going to best fit you. We're not in this rush market right now. So it's in, it may not be that way for, 2, 3, 4, 5 more months. It could be sooner. But that's just kind of thinking that we're just not in this, there's not this frenzy like we had a couple of years ago. So at least really consider starting the process now, if not doing it right now. I think it's just super important. So what if it takes you, maybe there's a little bit, as you said too, maybe there's a little bit of credit repair. Okay, we have to adjust some credit cards. We have to pay some credit cards off, or we found something like, oh, I didn't know about that, figuring that out. Maybe there was an account that was still open that you thought was closed, but it's dinging your credit a little bit. So if you take 2 or 3 or 4 months, whatever that may be, as Sean was saying, and get those wrapped up, then just like this, it makes the home buying experience so much better. It's not stressed out. You know exactly what
yeah.
your payments are going to be. You know exactly what type of house you can afford. We can, dial from 100 houses down to 5 houses and really pinpoint in there and come up with the strongest offer possible. Again, not just pre-approved, but pre-qualified, and where a seller is like, absolutely, let's take this one, um, for some different things. And
Yeah. I mean, we all have families and all
mhm,
the activities that we like to do every day, every
mhm,
week, and we all have jobs, right?
mhm.
So the last thing you want to be doing is stressing out about your credit, like you're saying, in the middle of the transaction. So it's super easy. Let's take one step at a time.
Yep.
Make sure it's a great experience because, like you were saying earlier, when interest rates drop, we have quite a bit of inventory. But while you're looking and shopping for that perfect home, you can have all of this already done and then focus on the inspection. We'll
Hmm.
get the appraisal done, and then it's smooth sailing. You can pack, you can do your work, not be stressed out with work, and really balance your time and make it a really great experience.
Yeah.
I think when interest rates do drop, we're going to be competing with a lot more buyers.
Hmm.
It's going to be a bit of a more frenzy, and so at least if if you're doing the pre-approval up front, then that's one fewer things you can take off your plate
Hmm.
and just focus on shopping and living your life.
Yeah. We're giving you cheat codes, guys, cheat codes.
Pro
Everybody needs
tips.
pro
Yeah.
tips to get there. So, again, absolutely zero monetary on this podcast. If you have somebody else besides us, that's great. But us sharing this information, we do ask that if you're, especially in this area, well, Sean's actually in 40 different states, so he could rattle them off for you, but you would have to rewind it 20 times. But realistically, just reach out to him
Most
and
of
say,
them.
hey, yeah,
Most of them.
most of them, right? um, Reach out to him and say, hey, I'm in this state and this is what I'm looking to do. Can you help me? And he's going to tell you right up front.
Yeah.
If you need a referral outside of the Coachella Valley, reach out to me. Obviously, Coldwell Banker is in 48 different countries, obviously throughout the whole United States. So if you're looking for some assistance or trying to find a realtor out in a different area, get a hold of me and I'll get you in touch with a great one if you don't have anybody besides that. So um, again, just to kind of recap, a lot of fluidity in the lending world, what Sean deals with. So, as I said, we talked about FHA loans, we've talked about VA loans, we've talked about bridge loans, and this one is an income statement loan. So, if you want a little bit more information on some of those that I just mentioned, do me a favor, do Sean and I a favor, basically go back to we have two different YouTube channels. Mine is Team Armstrong, super easy to find. You just click on one of those ones with Sean and I on there, super easy. Both of our pictures will be up there, and a description of what we talked about that day will be on there as well. And then Sean's YouTube channel is
Sean LaRue Home Loans.
there you go. And he has a lot more information than I have. He's got a great channel, a lot of different avenues you can go down to. Instead of scrolling through Instagram, you could go through tutorial. What Sean has produced out. He has some great content that could really help you out and help you understand things. And again, it's a resource knowing that, okay, if he's offering me this just off of YouTube, what is he going to offer me through loans? So that's why I said it's strongly encourage you, especially when he's licensed in 40 states, to reach out to him and see how he can best fit your loan for your next house for you. So
Well, and if you're still watching, I just want to say, like, make a comment. What kind of questions do you have? Reach out to us. We want to hear what you're going through or what some of your questions are about your individual situation, and we're happy to hear from you. That's kind of the whole point, whether you use us or not. We really want to have some engagement and hear your concerns because that could be a topic of the next podcast. So we want to
sure.
hear from you guys, and we hear a lot of the stuff, but what's going on with you? So
Absolutely. And if you haven't, again, Sean LaRue Home Loans is his YouTube channel. Hit that subscribe button. Best yet, you have even hit that notification bell on the side. So when new content comes out, you're actually notified on there. Same thing with me. Go to Team Armstrong YouTube channel, hit that subscribe button, look at all the past podcasts that we have on there, and then hit that notification bell. So when you're sitting around and something dings, hey, there's a new episode out, super easy to find instead of like, what if they put something new out? So that's it for me, man. Any final thoughts for you?
ah, let's go.
Let's
Yeah,
go.
let's go.
Let's
It's a
do
good
it.
life, brother. It's a good
It is.
life.
It's a good life. There's trials and tribulations sometimes, but most of all, we live in a great place in the United States. So anyway, that is it for this week. We will have another topic for you next week. Again, as Sean said, if you have a comment or you have a suggestion or you need more information on this, feel free to type it either in my comment box or Sean's comment box. And then we will not only respond to that, but we will also use that as a topic to go a little bit more in depth to help you out. And then you become a trusted resource to your friends and family. It's a beautiful thing. Information is awesome. So until we see each other next week, stay safe. But most of all, God bless, guys. Have a great, great day. We'll talk to you soon.